Morning, guys. We had a little cellar brush fire this morning we had to put out, so we're starting just a little bit late. But we're going to talk about foreclosure deals, on market foreclosure deals after the fact, and how you can do 40 plus of these a year. So we're going to talk about that in 45 seconds. Morning, guys. Welcome to Goat Talk. Goat Talk is our weekly Facebook Live that we do here each week. Uh, and we're on YouTube too. So if you happen to be watching us on Facebook, I want to ask you to come over to our YouTube channel, sub2tv.com. We release new videos almost every single day, something about creative real estate, sub2 deals, and that sort of thing. We'd love to have you sign up over here and get all of those videos. And if you're ready to start learning about creative finance, you want to invest in your education, check us out at sub2university.com. We've got several training courses over there that will teach you all about it and won't cost an arm and a leg to do it. Um, Today we've got Donny on here. Donny's going to be talking about how to find, fix, flip. He's got a whole bunch of F's in his system and how that works. We're going to go ahead and bring him on. Hey, Donny, good to see you.
Hey, William, how you doing today?
Man, I'm finer than frog hair. We're just having a great time here in Arkansas. We had things happen. We're working on this probate deal right now, and that's why we're running a little bit late this morning. We had a fire to put out with that. When you got multiple siblings that don't speak, man, it makes things interesting. But we got that taken care of. So Donny, we've got some limited time with him here this morning. He's on to some training stuff here in the next hour. So we want to go ahead and get started. Tell everybody about yourself, Donny,
Hi, guys.
and what you do.
Yeah, hi, I'm Donny Coram, the Foreclosure Deals coach, based out of Colorado Springs, Colorado. And basically, William, I help people to find, figure, fund, fix, and flip foreclosure deals. A lot of F's in there. We try to keep the other F out because we want to keep this a family show
That's
today.
right.
But last year, I did 47 foreclosure flips here in my local market. And now I'm coaching people all across the country to create their own foreclosure flipping empire in a market that's getting pretty primed to have a ton of foreclosure deals all across the country. Now, I want to add real quick that not all deals are foreclosures. We find a lot of just normal on-market deals, and not all foreclosures are deals. Right? But if you know how to find the right deals, you can set up a system that will allow you to do an onslaught of continual income producing fix and flip properties. That's what I coach people to do all across the country, and I'm super passionate about it.
Oh yeah, absolutely. And it's interesting. We were talking about this earlier. We catch them before Donny catches them after.
Right.
So here's your whole system. I mean, you can work it from all ends here. Hey, guys, say good morning. Let us know where you're at, what you do, and of course, if you got questions while we got Donny here, ask them. Matt, good morning to you. Katya, I believe that's how you say that. Good morning to you. We got Colby Parker here in Jonesboro, Arkansas. Man, we got to catch up. We're right down the road from you, I think. Well, I don't know. Maybe I'm thinking of something. I don't know. Arkansas is not that big a state anyway. So, Phil, good morning. Ryan, good morning to you. Gosh, we got everybody popping in here. Carla, Facebook user, don't know who you are. You're going to have to go to streamyard.com/Facebook. So we'll know who you are. Man, we got a ton of people in here this morning. Amanda, Michael. Oh, man. All right. So anyway, let's get started. So, Donny, how did you get started dealing with foreclosures?
Way back in the day, Bill, I did my first deal back in 2007, and I got started. I did a deal. They say you never forget your first deal, but I bought an antiquated Victorian style house here in Colorado Springs, Colorado. I managed to do everything wrong. Pretty much screwed that flip up entirely and still walked out with a $17,846.32 check.
Oh,
Never
wow.
forget your first one, right?
That's right.
So and from there, I realized that what I really needed was mentorship and coaching. So I brought on a local mentor here in my marketplace, and it completely changed my life. And now I realize that most people definitely need to start down the mentorship route if they are serious about doing a foreclosure deal or any sort of deal, William. Like, you've got some great coaching as well. I really encourage people to get help when they're trying to start into this process. You wouldn't learn how to fly a plane by just hopping in an aircraft and figuring it out. And you certainly shouldn't join the investor ranks and try to do your first deal, I don't think, without hiring somebody to guide you through the first one at very least. So that's what I do now.
Yeah. Coaching is important. I mean, I wouldn't be where I am today without some excellent coaches. I send a ton of people to Bill Bronchick. He's fantastic. He's just down the road from you. Great guy, and taught me a whole bunch of stuff. Let's see. We got our first question here. Corey asked, are you purchasing the foreclosures or just novating them?
I'm generally purchasing the foreclosures. We have done some novation deals, but with banks, they often, you have to close in your current title. And listen, the novation thing is awesome. It's definitely a new breed of foreclosure investing. But I can tell you that there's still something to be said for being willing to invest actual capital into deals. So I offer what I call education-based funding, where the hard and private money lenders that I'm working with specifically want to invest in deals from my clients. They're going to give you a lower down payment because of your coaching arrangement with me, a lower interest rate, and lower points because it's lower risk for them because you've hired a coach. So we can do a deal where you actually purchase the deal, do the work, and then sell the property normally, as it were, in the novation process.
Okay, gotcha. People use all these fancy words now. I don't know. Novation and all this stuff. Everybody's got new terms for the old ways we've been doing business. There was one recently, I can't remember the term now, but I said, oh, you mean transactional funding? Gosh, we've been doing that forever. And then they got all these crazy new animal names.
They renamed it, yeah.
Yeah, really. Hey, Marlon, good to see you. Got Cindy Crane down in Mississippi. And Matt's got a question here. Matt says, why would someone do novation when they can get a power of attorney?
Sometimes you can't get the power of attorney, and I think in a lot of cases, again, we're going back to dealing with foreclosures and bank-owned property. They're certainly not going to give you a power of attorney on the deal. And guys, to William's point, we've complicated this process so much over the years with all this new terminology. Keep it simple. You buy the property, fix the property, sell the property. It's just a much easier. I don't know if it's easier. Obviously, you got to come up with funding, but this is called real estate investing for a reason. You're either going to invest in marketing, you're going to invest in properties, you're going to invest in something. Now, you don't have to use your own money to invest, but trying to get a power of attorney from a foreclosure is a difficult process at best. So my experience is just better to buy the property, close on it, and then do what you're going to do, and then resell it or refinance it, whatever your plan is.
Right. So are you? Let me make sure I understand this correctly, because I misunderstand stuff all the time. So are you usually buying direct from the seller, or are you buying after it's an REO? What do you generally do?
Listen, I'd say you got to go back to the past when there were a ton of foreclosures, right? And when there were a ton of foreclosures a couple of years ago, I was buying directly from the REOs. In the last 2 years, to your point, I'm buying a lot of them before they go to foreclosure. The idea is that you're chasing distressed assets, right? So I named myself the Foreclosure Deals coach because there's a lot of real estate investment coaches out there, and I focus my energy on properties that are either heading to foreclosure or, to your point, are already foreclosed. But the point is we're looking for deals, right? We want to make sure that we are buying below market deals, whether it's before the foreclosure or afterwards. Once you understand the numbers and you can do that properly, it doesn't matter if it's before or after. It matters that you're buying the property correctly. As you would agree, William, you make your money when you buy.
Yeah,
right?
That's for sure. Yeah. And it doesn't matter what strategy you're using. Now, people, we used to say you make your money when you buy, when we were talking about an equity position,
right?
That you can't manufacture. Now, the last 2 years have proven us wrong. Wholesalers have been out there paying full price for properties, flipping them and making money anyway the last 2 years. But whether you're buying for cash flow or whatever, you got to make sure those numbers are right. We've got Andrew in here. Andrew is our resident mortgage specialist. He's one of our Sub 2 Max students. And as one of the benefits of being in Sub 2 Max, if these guys have questions, we just invite them in the group. So, Andrew, good morning. Good to see you.
Hey, how are you?
We're doing great. So, you have a question for Donny this morning?
Yeah, Donny, what hard money lenders are you relying on currently, and what are the exact terms you're getting?
I have a couple across the country, including Anchor Loans out in the West Coast. I've got the names are going to fail me because you put me on the spot on this, but I have about 4 or 5 guys that I'm reliant on. I know you and I were chatting briefly about Easy Street.
So yes. I saw you pop up today. I was like, shit, I owe Donny a chat. That's what made me jump in. I'm like, oh no, I totally flaked out on the guy.
Well, that's all right. I know you're a busy guy, so no offense taken. But yeah, I wanted to chat with you about brokering more loans and kind of focusing. Yep. I have this education-based funding process. I want to cement relationships with lenders like yourself, and for those who are watching, the lenders, I'm establishing relationships that explain that a lot of lenders are experience-based, right, Andrew? Where a lot of people, they want to know that you've done at least a couple of deals. Well, if you're starting out, you can add me to your management team on your LLC, and I can get you a better term on that loan because, with my 300 deals of experience, guys like Andrew definitely want to see, more skin in the game or less skin in the game if you've got experience.
Yeah, so you'll get better terms for sure if you can demonstrate and you've got some settlement statements. That's right.
Yeah. So I'm helping people do that because I have settlement statements, because I've got experience. I'm happy to lend that experience to my coaching clients. Obviously, I have a financial incentive in that I have you as a coaching client, but I don't take any profit on the deal. I am purely a coach. What I want is to walk you through your first deal, let you take the profit with the hopes that you'll tell everybody that Donny Coram is the greatest investment coach that ever lived, besides William Tingle, of course, and that I can help you to do your first deal and subsequent deals after that.
Yeah, sounds great. Well, good to see you on this morning's chat.
Yes, sir. Thanks for joining us.
And hey, Andrew, while Andrew's here, if you guys are looking to refinance, buy property, I think Andrew's doing some hard money lending now. How can everybody get in touch with you, Andrew, if they need to?
Yeah, I'll put everything in the comments, and it's all my direct information. But yeah, no questions off limits. I don't have banker's hours. It's never intrusive. If you're calling me about this topic, that's why I'm licensed. So whenever it strikes you, go ahead and reach me, and I'll put it in the chat right now. But thanks for the plug, man.
Okay, I appreciate you. Thanks. All righty, let's see. We've got more questions. Who we got here next? Marlon said, "Who do you use to pull accurate pre-foreclosure lists?"
I'm still a big fan of Propstream for that one.
Mm-hmm.
If you're doing the pre-foreclosure list, I think Propstream is the best in the business for that. Foreclosure.com provides the data, but they don't exactly have the ability to do the skip tracing and whatnot. So for my money, I would go Propstream.
Mm-hmm.
That's what we use.
We agree. We love Propstream too. And we just put a banner up down here. You go to sub2data.com. You can try Propstream for 7 days, absolutely free. So go check those out. We love Propstream. Okay, let's talk about your system, Donny. I know we've only got you for a short time here today. We want to make sure we get through this. Somebody listening to this today that wants to get started, you've got a process, find, figure, fund, fix, and flip foreclosure deals. So let's go through that. How do we find them? What's the best way to do that?
The best way I have found to find foreclosure deals is the Privy application. Although Propstream is great for doing pre-foreclosure data, when it comes down to doing on-market strategies, most people need the simplest way possible to get into finding properties. And honestly, William, it's more of a mindset thing. Mm-hmm. If you don't see deals on a consistent basis like you and I do, because we're dealing with deals all the time, you start to develop limiting beliefs that there are no deals in your local market. So for my clients, I break those limiting beliefs very early on, get you installed in the Privy application. You can go to bit.ly/FDC Privy to download Privy with my affiliate link. But on Privy, you're now seeing on-market properties that are theoretically priced below market enough to be worth researching. This doesn't mean that every deal that Privy touches is going to be a gem. It just means it gets you kind of trained on the process of looking at deals every single day and doing the deal analysis, which is required homework to become a professional deal hunter,
All right. So that's your using Privy to locate those on-market deals. to get out there and find those. Okay, so once we do that, you say we have to figure. And when you say figure, you're meaning?
Analysis.
Right.
Deal analysis is so important, being able to accurately calculate your ARV. You know, the funny thing about real estate investing versus, say, stock market investing is mostly theory. You're hoping that the price goes to a certain number. In real estate investing, if you do your analysis properly, you should be able to gauge your sale price on that property within 2 to 3% with accuracy. The market doesn't lie. So Privy also helps my clients, my coaching students, to get an accurate assessment on what they're going to sell the property for when it's done. And it also gives you a really good view on what that property needs to look like in order to get that number, because you can see the pictures of the properties that sold at that higher value. So you're not theorizing as to what your rehab budget needs to be to get that property to the level it needs to be to get it sold.
Right. Let me ask you this. I know a couple of people that are pretty big in the game, and the consensus for most of these guys seems to be right now, if you're buying a house with the intent of rehabbing it and flipping it, and you're looking at a 90-day plus hold time.
Okay.
And I know this is market specific, but I'm asking you in general because I know that you coach people all over the country. What they're telling me is if your intent is to buy, flip, and flip 90 days down the road, you better calculate a 10 to 15% price reduction in what that house is going to be worth. Now, we're already seeing big declines in some markets, and some are holding fairly stable. What do you think about that?
I think you're valid. I think you need to be able to spot the market trends. That's another reason that doing your analysis is so important. Certain markets are still trending downward, William, and that's the reality of a lot of markets. And in that situation, it may not be unlikely to go 10 to 15% lower. I will tell you that Colorado Springs, my market, we took a big hit in the fourth quarter. That trend is kind of flattened. I do not predict that we're going to see it go any lower in my market than it is right now. I also not expecting it's going to bounce back up. But the point is that you don't want to do this on theory, or you don't want to hope. Hope is not a business strategy, right?
That's right.
Proper deal analysis suggests that if you know where the market is trending, you should be able to accurately predict where it's going by the time your property is done. If the market is still trending downward, you got to buy as if the market is trending downward. If it's flat, budget for that. Like, this is where it is. This is where I predict it's going to be. You can't get the numbers exactly right every time, but trend analysis is actually very easy if you have enough data and you understand how to interpret that data over time.
And correct me if I'm wrong, Donnie, but even in markets where the decline has slowed down or stopped, you've still got longer days on market. So you got to allow for that.
Absolutely. Whereas we were selling property, we were measuring our time on market in hours just about 6 to 9 months ago, right? Now we're definitely looking at the days on market. Here in Colorado, we are at 38 average days on market. It is lower in the entry-level price points, though. So once again, don't leave any of it to chance. Really do your data analysis properly. And again, if you're spitballing, if you're out there doing the dartboard logic, or worse still, no offense to the agents in the room, but you're relying on your real estate agent who is commission-driven to make that decision, you're not getting accurate data. I know most agents are going to try to report the data, but they also need to sell houses. As a professional business consultant, my entire objective is to make sure that the data that we're interpreting together is accurate, because I want you to do lots of deals, because the more deals that you do, the more clients I'm going to be able to get in my practice, you know? So it's really big to me that we're using accurate and accurately depicting that data.
Right. For sure. Hey guys, if y'all have questions, remember we're running a little short on time today, so we've got about 15 more minutes. So y'all give us those questions so we can get Donnie to answer them. Okay, so you find the deal, you figure it, you accurately calculate cost, holding times, that sort of stuff. Now you've got to fund it, and for a lot of investors, that's the hard part. But it sounds like you've got that figured out between you and Andrew. So tell us what do you do to fund this thing?
Certainly. So I call it education-based funding. And the idea behind it is that whereas most people trying to do their first deal are going to have to put 20 to 25% down in a lot of cases. And listen, put yourself in the perspective of the lender for a minute. You've never done this before, right? You're coming to a brand new market, and now you want to borrow $200,000, $300,000, maybe even $400,000 to do your first deal. That's a lot of risk for a guy to put money out there. Well, with my education-based funding system, you're hiring me to become a part of your flipping team. And because I've done over 300 deals in my career, I can go to your lender, or my lenders in this case, and I can say, this is one of my coaching students. And as a result, we can give them a lower down payment. You may be putting 5 or 10% down. You can get a lower interest rate. Whereas you might have been at 10 to 12%, you may be looking at 9 to 11%. And finally, instead of putting 3 to 4 points origination, which can really chop into your profit, you'll be looking at putting 1 to 1.5% origination with my deals. Now, this is all kind of waggle numbers based on your financial circumstances, not really credit, and also based on the deal itself. But what I've seen consistently, as Andrew just alluded to, is by bringing in an experienced partner like myself, it will be easier, it will be cheaper, and that alone pays the price of my coaching, because now you're in a spot to do a deal with less money out of pocket and at substantially less cost. So the benefits speak for themselves.
Oh, well, I mean, it's got to make sense to people that are fronting the money that if you're there holding somebody's hand through the process, then, you know, it's going to be a moneymaker for everybody, and they're at less risk.
Absolutely.
Yeah, for sure.
Absolutely.
Okay. I think this question was when we were talking about lending. Isn't that Kelly Smith's lending company? Matt asked, and I'm not sure. I don't know who Kelly Smith is. Maybe that's who you were talking about, or Andrew was talking about.
I'm not. Yeah, I don't know. I'm not sure who Kelly Smith is either. Sorry, Matt.
Okay. Corey says, love the energy. I know. He's so excited about it, man. You know? I know.
Too much coffee this morning. You know, I got 3 cups by 8:30 is not healthy.
Is that what it is? Okay, guys, y'all give us your questions here. We'll get those answered. Okay, so we worked through the first 3, find, figure, and fund, and now we've got to fix this thing.
Absolutely.
How's that working out these days with COVID, product shortages and supply chain, and how do you get that stuff done?
Let me tell you, it's an experience, but I want to say to start there, the fix has changed so much over the years. First of all, the color schemes that we used to use have changed, but really what we're focusing on in the fix panel is what not to fix. The reality is you don't need to build the Taj Mahal to sell a property. Now, obviously, the nicer the flip that you do, the better. But, you know, I jab at Chip and Joanna Gaines a little bit, because at every one of their shows, they're building these gorgeous remodels with gold-plated faucets and helicopter landing pads and all that cool stuff that you just don't need to sell a property. What I'm helping people is to make sure that they're not over improving the property and not under improving the property. From there, we walk through finding your contractors, looking for remodelers, making sure we're creating the right scope of work, budgeting for the rehab properly, doing the contracts that you need with your contractors, and all the pieces that you're going to need to get this to the finish line successfully. So a big part of my coaching is just making sure that you're not going to get overwhelmed with the process of fixing it, but you're also not going to spend too much money trying to build too nice of a property, which is not necessary to get it sold. Remember, your competition are the retail sellers in that market. Okay. So you're not competing with the brand new builds in that area. You're competing with Joe Schmo seller. So we want to get the property just nice enough that it can accurately compete with properties in that area that is sold. That's a big part of what my coaching does, is make sure that your improvement level is just right.
Right.
You know?
Because, you know, if you're not paying attention to the price value of the home that you're doing, it's easy to over improve. And I know as a former part-time rehabber, you want to put something really nice that you would want in your home, but you got to remember what price range you're operating in and what the norm is for that. So you can easily overspend. That's an important point. Dana had a question. My apologies, this has already been asked, but have you acquired any of your foreclosures as sub-twos?
No, Dana, you can't. Remember, banks are not playing creative finance with you, okay? So when you're dealing, we're talking about after foreclosure. Now, before foreclosure, if you're dealing with a pre-foreclosure market, absolutely. A lot of them we acquire sub-2. We cure the note so it doesn't go into foreclosure. But if we're talking purely about a foreclosed home, REOs, banks are not going to let you take over payments. They already own that property. You do have to show up with financing to buy a pure foreclosure.
Mhm.
But again,
Right.
prior to foreclosure, it's certainly possible to get it sub 2. Anything you can do that's creative, you know, William's the king of creative finance here. Anything you do that's creative is just a better deal for you. But if you want to build a consistent deal flow and do some creative financing, you might have to find a balance between properties you buy outright and properties you can finance using creative financing.
Mhm. Okay. We've got a question. I have a 3-family deal that has equity. The realtor told me that the owner will consider financing it. How to structure it as a sub 2 deal. It's not in foreclosure.
I would say by virtue of them considering owner financing it, that's already a sub 2 deal, right? At this point, you're just a matter of getting on title and then taking over the payments. The question there, Katya, that's tough to answer is how much do they want down if they're going to do the owner carry financing and then, you know, restructuring that. That's more of a William question. What do you think, William, in getting that restructured?
Well, the first thing I would do if this were me, and if a realtor had brought me this deal, I would ask some questions or do a little bit of research to find out, number one, is the seller an investor? If they are, and you can tell that on a tool like Propstream, if they own multiple properties. If they're not an investor, they're probably not looking for a high interest rate or a high down payment.
Right.
And I would go in and try to find out, like I said, a little bit of research. Are they in foreclosure? Why are they selling? What's their problem? Do they have issues? And then I would structure that deal, try to get it with no money down. And a lot of people forget about this, but the next best thing to no money down is payments in advance.
Right.
A lot of times, if you're talking to a seller and they insist on a down payment, you can say, well, we normally don't put anything down, but how about if I make 6 payments in advance? So if your payments are $1,000 a month and you give them 6 payments in advance, that's $6,000 up front, but you won't have a payment for 6 months. So it works out really well for you too.
Right.
And I would go on that route. I would just make the offer that worked for me. If they're open to seller financing and you find out they're not an investor, a little bit of research shows that they owe about what the property's worth, then you could approach it as a sub 2. Otherwise, if it's free and clear, or they have a lot of equity, it's probably going to be a wrap or something like that, where it's not a true sub 2. But that's how I would handle it. So,
Genius indeed.
Let's see. What if we? I think we already got that one. Okay, I think we already did that one. So, okay. So if you got my producer and we're battling over which ones we're going to show here. So anyway, let's move on to the next thing. So after we fixed it, we have to flip it. So what do we do there, Donny?
So obviously that's everybody's favorite part because that's when we get paid. But in the flipping stage, I'm walking my clients through the proper way to market and sell the property. Now, sometimes that involves hiring an agent, but in my experience and in certain markets and price ranges, we don't have to hire an agent, which no offense to the agents in the room. Obviously, I love my agent brethren, but the reality is if you can save 6% on the deal, it's going to make you more profitable. The reason why a lot of investors don't want to do this on their own is because the paperwork's a little intimidating. You know, real estate agents have made their living on explaining how dangerous it is to sell a property on your own. Well, I was an agent for 17 years, so I know the paperwork very well. So part of what you're getting with the coaching is the ability to sell the property, and you'd be shocked at how effective it is now to sell a house on a combination of Zillow for sell by owner and Facebook Marketplace, and there are listing services where you can put the property on the MLS and field your own phone calls, all without having to pay a listing agent commission. So the combination is that, you know, you can now sell a property on your own. Our goal here for my investor clients is to maximize your return on investment. The more money you make on this deal, the happier you're going to be with me as your coach, and the more deals you're going to be able to do. I'm really big on wealth building, so anywhere we can cut costs, I'm helping you to do so. But you do have to have a professional marketing strategy to sell any property, and that's where real estate agents come in. I can teach you that marketing strategy because I did it for so long, save you the money in doing so, and ultimately provide a lot of additional profit on your deals by hiring me to help you walk through selling that property on your own.
And that's going to be so important, and I believe in the coming market. I mean, you know, all your marketing strategy had to be for the last 2 years has been, I hope a buyer comes along. Boom, there they were, 10,000 of them. Bidding 50,000 over asking price. That's changing just a little bit right now, though.
Truly is.
So it's important to have somebody that can teach you how to do some marketing and get those things. So I think Katya had a follow-up here. on that triplex. The family lives in the property. He wants 900. He owes 236. Okay. Well, again, I would just try to find out if he's a professional or if this is just a property he owns. There's some reason he's willing to take owner financing. Okay. Maybe the house has been on the market for a while. Maybe he just wants income. Maybe he's behind in payments and nobody knows about that yet. So try to find out why he needs to sell this house, and then make your offer accordingly. And I would ask to present the offer. I would ask the agent if I can go there to explain things and just explain to the seller. I found the best way to do that is just to let them know, listen, this thing's got to make sense for all of us. And I'm an investor. I have no shame in pointing out I do this to make money. And, if his terms won't allow you to make money, then it's just not a deal that'll work for you. And see if y'all can work it out. So, I mean, there's, you never know. Amanda said, when the home is already foreclosed, you're mostly working with banks and auctions and not sellers to purchase the property, correct?
That is correct, Amanda. And listen, don't think of banks as non-sellers. Remember that you have humans behind it. They definitely don't see. You're not dealing direct with the seller that lived in it, so the emotional factor is different. But there's an art form to dealing with banks. You don't ever talk to the bank directly. You're talking with the agent. So look at the motivation of the agent. They're looking for somebody that's going to be easy to deal with, that is likely to close, right? And it's not going to beat them up on inspection deadlines and things of that nature. So the process when you're dealing directly with banks is entirely different than when you're dealing with retail sellers. But once you master that process, you're going to find that even if you're not the highest offer on a property, by virtue of the fact that you know how to dance properly with banks, you'll get deals done, whereas other people will not, because you understand how the banks want to be treated as you're buying those properties. There's definitely an art form to it.
Okay. Let's see. Kobe said, what about foreclosure or seller financing properties that need total rehabs?
This sounds like there's two questions there, but yeah, absolutely. Listen, if you can get somebody to carry the note for you on a sub-2 basis, again, I don't want to step on William's toes on the sub-2 area, but if you needs a total rehab on there and they can seller finance it, that's just a better deal entirely. Once again, if it's a full-fledged foreclosure, seller financing is not an option. But remember, you're using harder private money. It's not like it's your money. You're still using somebody else's money to do the deal. So whether it's a seller finance deal or a hard money loan, it still comes down to somebody providing the funding. So yes, there's a personal liability that's a little more extreme, but I think of seller financing as a personal liability. If I promise to make the payments to a seller, it's no different for me than if I had financed with a hard money lender. Obligation is obligation, and you want to keep your obligations and your integrity to be good at this business.
Right. Absolutely. Ryan said the only dates we like are closing dates.
He was responding to the spam post from earlier.
Let's see. What are the advantages of doing foreclosures to pre-foreclosures?
I think there's a simplicity to the foreclosures. Foreclosures, once they're listed, there's a number you can buy it at, right? Pre-foreclosures is a big negotiation that's got to happen. You got to know what the payoff is, etc. When the bank lists the property, they're done with it. Like they just want out. You know what your buy price is. You generally know what your sell price is. I don't know about you, William, but I like working on the numbers, and if the numbers are plain and simple, I can do more deals if I'm not spending time in the negotiation phase. Now, there is something to be said for pre-foreclosures tend to be better deals. To William's point multiple times here, that by the time it forecloses, you've got to deal with the legal fees, the markups, the back payments, yada, yada. So I don't want you to sleep on pre-foreclosure. A lot of opportunities there. But when I did 47 flips in a year, I had to create a very consistent deal flow. For my clients, my objective is one deal per quarter at a very minimum profit at $25,000. But for somebody trying to do a lot more like I was, or when you're trying to scale, your deal flow has got to be very consistent. And although you can do that with pre-foreclosures, I've just found that supplementing your strategy with some on-market strategy foreclosure deals and some off-market pre-foreclosures is just the best way to keep your contractors busy, your hard money lenders happy, and your paychecks consistent, right? And that was just a big thing for me when I was setting it up. It's just super important to get that consistency.
As far as what I think about the advantages, I think that depends on your long-term strategy. If you want cash flow, there's nothing like taking over a 2.9% interest rate financing loan and wrapping that note and create, creating a down payment on the front end that goes in your pocket, cash flow every month that goes in your pocket, and a back end down the road. If I had a friend one time, a good friend that absolutely hated dealing with people face to face. So his strategy wasn't pre-foreclosure stuff. He bought stuff straight off the MLS, rehabbed it, and sold it. And that was good for him because that was his personality.
Yes.
If you like talking to people and you like making a deal, then pre-foreclosures are a great way to go. So there are a lot of different reasons. It just depends on you and what you want to do.
Absolutely.
Okay, we've got time for one or two more questions. What do we have here? Amanda said, do the banks have agents that specifically work with their foreclosure properties, or is it third-party agent the bank hires that investors create relationships with?
So the answer, Amanda, is both. Banks have asset managers. They don't call them agents, right? There's asset managers at the banks that work with the foreclosed properties, but they all hire a local agent licensed in the market. So that's the third-party agent you're referring to, and that's generally where investors should be setting their relationships. I know all of the REO agents here in town personally. I take them out, I wine and dine them, I remind them that I'm still here, so those third-party agents will become very clear. The best place to start finding those is look at the HUD listings, because a lot of the agents want to get a relationship with HUD foreclosures, because that becomes a stream of business from FHA loans that go bad. But the agent is part of that listing in the HUD listing. So if you go to HUDhomestore.com, you can look up all the agents that are working with those different HUDs. That's a good place to start, because if they've got the HUD contract, they generally have other REO contracts as well. But once you know who your third-party agent is you're referring to that the bank hires, that's the person that you want to maintain and create a relationship with, because they can't legally give you an inside look. They have to put it out on the market, but they certainly can help you to know about those properties at the same time that those properties are listed, giving you a bit of head start, opposed to the rest of the market that's finding about it as the same market finds out. So establish those relationships with the third-party agents that list those properties. They have the REO contacts, and they can certainly help you to see those REO properties as they are coming and get you an inside track a little bit on what's coming down the pipeline as to the foreclosure listings.
Okay, great. I've got a comment. Glad you have Donny on here. Not too many investors talking about this.
Hey, well, thank you. I appreciate that.
Fantastic.
Glad to be here.
Then we got Randy in here. Randy's one of our Max students. Hey, gang, looking forward to seeing everybody next week. Guys, we're having our Sub-2 Max. We have 3 masterminds a year. Next week, we're having our next one in Little Rock. So Randy's going to be there. Randy's the one that got us turned on the radio. So if you guys haven't watched that Go Talk episode we had a few weeks ago, Randy talked all about radio. So we're loving it. So thanks, Randy. Looking forward to seeing you too. Okay, guys, y'all check out Donny at foreclosuredealscoach.com. And he also has a Facebook group that I believe is free to join. Is that right?
It is.
And okay, that's our Facebook group, fdcoachgroup.com. So you guys run over there, join that Facebook group. Won't cost you a nickel. And Donny will share information with you and on how to get this stuff done.
So, I really appreciate it, William. Thank you for having me.
We appreciate you being on here today. And yeah, thanks so much. A lot of good information. And so y'all go check him out. So thanks, Donny. We appreciate you.
Thank you, William. Thanks for having me.
Thanks. Have a good day. Okay, guys, that is it for this episode of Goat Talk. We appreciate you being here with us. Share it with your other investor friends. Invite those guys over, and don't forget to subscribe. I think we've got a link here somewhere that you can subscribe to our YouTube channel at sub2tv.com. And when you're ready to get started in creative finance investing, we've got the best deal on coaching on the planet. That's $7coaching.com. I'll answer all your questions personally each and every week, and we've got thousands of, or hundreds, maybe not thousands, but we've got hundreds of other investors in there that are very experienced that can also answer questions for you as well. So I'm still battling with my producer over here on, and then we've got our premium coaching, which is Sub-2 Max. If you want to take your Sub-2 investing, your creative finance investing to the max, check us out over there. Great group of people, very experienced investors. We have 3 yearly masterminds. We're having our next one in Little Rock next week. So we're really looking forward to that. So we're going to get out of here. We'll be doing our next, our Goat Talk. We'll miss next week because we'll be at our mastermind, but we'll be back in a couple of weeks. So until then, you guys get out there, talk to some sellers, and buy some houses.